recording?
Yeah.
Mm-hmm.
Okay. And then in the top left-hand corner, there's a circle, a white circle with a red dot in it. I need you guys, when we get started with class each time, to look at that and make sure that we are recording, so that your classmates have the benefit of the discussion and everything that we go through. Okay? Ashlyn, you with us?
Yes, sir.
Do you have video? David's camera's not working. Do you have camera?
I am figuring that out right now.
If you go up to the top right where the red leave button is, look 3 icons to the left, you'll see what looks like a camera. Is there a slash mark through it?
Did it work? Yeah, it worked. Okay.
There we go. Yay! See, I'm different than a lot of the professors. I like to see y'all's bright. Well, no, they like to see it too. But I mean,
yeah.
One of the things you guys will find with me, and I'll tell you right up front, you don't have to worry about being the class clown because I got that covered. Okay? I like to joke and have fun. I like communication back and forth between us. That's what makes the class. You guys will. I think you guys will get more from it. It makes the class flow better, and in all honesty, it just makes it more enjoyable. Okay. So as we're going along, if you guys have questions, stop me, ask me questions. Okay. So anyway, let me kind of get into my formal routine here. Okay. So the first thing I need to say is, if you're taking this class and you expect that at the end of this class you're going to understand how to be an accountant, wrong, not, it ain't happening. Okay? Because I'm not an accountant, and I can't teach you to be something I don't know. What I am is a manager. Somebody who works in a leadership position, in a management position, somebody who's owned his own business, and somebody who has to, what I did was I paid accountants, okay? Because I don't like accounting. I can teach it from the perspective that I teach it from, and I say all that to say this. I am going to teach this class as from the perspective of accounting for managers, okay? We will always be looking back to the management perspective in this class. The reality is, okay, I got to do this. My wife always fusses at me, but I got to do it anyway. We as managers don't do accounting. Accountants are strange people, and those people live behind a curtain. We leave those people behind a curtain because they're weird. And I have proof of this because I'm married to one of them. Okay? The reality is, though, that every once in a while, them weird people behind the curtain will pass something out to us. They pass out financial statements to us. During the course of this class, we're going to work from the top line on that, and almost every, and I say almost because there are some specific ones that do not, but almost every financial statement, in whatever format you're using financial statements, starts at the top with your sales or your revenues or whatever income you have coming in. And it works its way down the page, and at the bottom line, you end up talking about your bottom line, your profit or your loss. You know why they call it the bottom line?
Because it's the bottom of the sheet of paper?
Because it's the bottom of the piece of paper, right. It's usually the last line on the statement. Even if it's a full sheet of paper and you're only using half of it, it's usually the last line in the statement. It says profit and loss, P&L. There's a lot of different phrases you hear for it, the margins, but it's the bottom line. The bottom line is we're in business to make money, right? Businesses that don't make money don't last very long, do they? Okay? The purpose for this course is to train you guys, to enable you guys to be able to understand what's in between the revenues at the top and the P&L or the bottom line. All of those things in the middle that the accounting department calculates and figures in order for you to understand. Let me put it this way, and we'll get deeper into this in a couple of weeks actually, but if you're running a business or you're running a manufacturing business and your boss comes to you, you're the production manager, and your boss comes to you and says, hey, my cost of goods sold is out of whack, you got to fix this, and he hands you the financial statement and you go to looking at it. Well, in order for you to look at that financial statement and understand what it is you got to fix, you at least have to have a baseline idea of what those strange people behind the curtain did to get those numbers, right? Because the numbers aren't going to do you any good if you don't at least have an idea of how they got it. So that's what this course is designed to do. It's to show you different types of businesses and how we do the costing, the cost allocations, how we figure the different things that we figure, so that we as managers, if my boss comes to me and hands me the financial sheet and says my cost of goods sold is out of whack, okay, well, I have to be able to look at it and say, is the problem that I'm paying too much labor? Is the problem that I'm paying too much for my raw materials? Is the problem that I have too much overhead? There's a lot of different things that gets calculated into cost of goods sold. And I have to be able to look at that sheet and be able to identify where the problem is. Because I can look at a financial sheet from this month or this quarter, and then I can look at the financial sheet from last quarter, and if all of a sudden my labor cost has jumped by 20%, but my productivity has not, well, then I have to start asking what happened. Okay? Was there overtime? Did we have a special project we were working? So I have to be able to answer those types of questions. And that's the purpose, or the way I've designed this class as far as how we're going to approach understanding accounting for managers. Fair enough? North and south? Okay. So, that said, now let me see if I can figure out this technology. Okay. So, I need to open that. And not that one. Well, they're all PowerPoints. That's what. One's PowerPoint, one's PDF. All right, now let me see if I can share my slide and make this thing actually work for me tonight.
It'll take a while, Jess. The motorcycle engine I hear is actually a computer fan.
Yeah, that's the fan on my laptop. That's the
Okay.
reason I use a totally different mic, because if I was trying to use the one on my laptop, you guys wouldn't be able to hear me at all.
Okay.
So I'm about to go get me a new laptop. Oh, wait a minute. You know what? I may have switched. Hang on a second. Let me try something real quick. Because I may be using the one on the computer. Let me, device settings. Okay, I switched microphones. Can you guys still hear me?
That's way better.
Yeah, that's
Did
way
that
better.
get rid of the motorcycle?
Yes.
Yeah.
Okay, so I was on the wrong microphone earlier. Okay, so, all right. Yeah, because literally that when I was trying to do this just using the laptop, I had students like, man, I might as well turn it off because I can't hear you. So, all right. So now that I got that fixed, now let me go up here and I want to hit this button. And I want to hit this button. Okay, now, because I can't see what you guys can see, I have to ask, can you guys see the syllabus?
Yeah.
Okay,
Yeah.
good, it worked. It doesn't always work for me, so I always have to ask. All right, so if it looks like I'm not looking at you guys, it's because I have two monitors here. My camera's set here, but what I'm looking at is over here, so I'm not looking away from you. I'm just looking away from you. Okay. Pretty much standard stuff at the top. You guys, I'm assuming you guys have all already downloaded this. You know, this test tells you when and where we're meeting. You know, it is live class on Teams. So, like I said, if you're around and Jacob did go down to the classroom, and you guys are welcome to do that, but not required as long as you've got an internet connection from wherever you are. Okay. We are from 6 to 9. Very rarely will the class go a full 3 hours. Most of the time it goes between 2 and 2.5 hours. Okay, and we do take, usually what I do is I only take one break. We'll go for about an hour and 10 minutes or so. We'll take about a 15-minute break because by then my throat's dry and I need to get up and go get a cup of coffee or something. And then we'll come back and go for about another hour or so. That's just typically what happens. I know I've done it enough times that I know that's about how it goes. These learning outcomes, that all looks like a whole bunch of gobbledygook. The bottom line is, don't worry about the stuff underneath. That's the technical stuff that I have to have on there in order to meet the accreditation stuff. What you guys, you know, you're going to be able to distinguish management accounting from financial accounting. Okay, that's one of the things we're going to talk about tonight. What's the difference? Okay. You classify costs and prepare income statements. Okay, these are the kinds of things. So if you guys just kind of look at the wording right next to the numbers, don't worry about that other stuff. This is the part most people want to know what's going on. Okay, you have no papers to write in this class. Yay!
I'm on board with that.
Yeah.
You say you're on board with that?
Yep.
Okay. There are no papers to write in this class. You will have a homework assignment each week, and it's basically based on the material that we're going to cover that week. Okay. There are a couple of things that I need from you. I need you to tonight. I seriously doubt if anybody's done it, but what I need you guys to do is before you come to class, I need you to have read through the chapter that we're going to be covering. Okay? It will, I'm telling you, some of you are not going to do it. I got it. It's not going to happen. And I'm not talking just to the 3 of you right now. I'm talking to all 9 people in the class. I understand if you're one of the students that's not in class and you're watching the video, read through the book before you watch the video. I've taught this class enough times now, guys, that I'm telling you that if you will read through it, when you read through it, you're going to go, huh? Okay? Because it's not going to make a whole lot of sense to you. But if you have read through it and your mind is at least thinking on some of the dots that's in there and you're trying to connect those dots, then when we get into class and I start to explain the information that's in that chapter, it will make a whole lot more sense. And if you don't, then when you get into class, then you're basically trying to play catch up as I'm trying to explain it to you. So the chapters are not long. Most of them are no more than about 10 or 12 pages, and there's a lot of charts and graphs in them, so it's fairly easy. But read through the chapter before you come to class or before you get ready to watch the videos. It will make it easier. I've had too many students that have done it both ways, and I'm telling you from experience, it'll make the class easier for you. The other thing I need to tell you is that typically the students in this class, well, David, you can't raise your hand, but show hands. How many of you kind of didn't want to take this class because you weren't really sure you wanted to do the math involved in accounting?
Not me. Don't really bother me.
Okay. There's a lot of students that have a problem with the math in the class, and they get all worried about it. The reality is I'm going to show you guys how to get through an entire class in accounting, and never once do you have to do a math problem. Now, do you think that's possible?
Yeah.
Yeah.
You know how I'm going to show you how I'm going to get you through that?
Excel.
I'm going to show you how to use Excel. Here's the next question then. How many of you know how to use Excel?
Not me.
Not really.
Okay, now let me re-ask this question. How many of you have ever opened up Excel from scratch and built a spreadsheet or something in Excel?
Negative.
Tried to.
Okay. The reason I ask that is this. A lot of people have opened up Excel because they've had charts and graphs and other stuff that's in Excel. But very few people have ever done it where they actually put numbers into squares and they get Excel to do the math for them. They build formulas into it. Okay. So I'm going to show you, and that'll be part of what we're going to do tonight. It's a very rudimentary, basic. I'm not calling you guys dummies. Okay. But it's Excel for dummies. Literally. Way back when, I'm getting a bad network quality. Am I freezing up on you guys?
No.
No.
Okay, well, if I do, I just got a message that I'm getting bad network quality. So it's very windy where I am right now. So sometimes when it gets real windy down here, my network will cut in and out. So if I freeze up on you, bear with me. Hopefully I don't freeze up and have to go out. But if I do, I'll reload and come right back in. Okay. But anyway, in the Excel, what I'm going to do is literally I'm going to show you how to identify the different cells in the Excel. I'm going to show you how to set up formulas in Excel, and it's going to be the most rudimentary, basic process. There are a whole lot more complicated ways to do it. And when you're doing a whole lot more complicated stuff, that's great. But we're going to add, subtract, multiply, and divide, and that's it. Okay, and we're going to get Excel to do it for us. So anyway, getting back to, I'm kind of jumping around tonight, but getting back to the syllabus, please read the text prior to the class time. It will make your experience in this class better. All right. Does everybody have the book?
Yep.
It's still on its way.
Say that again.
It's being shipped to the school.
Okay.
It's delayed.
So this is the book you guys got, right? Okay. The reason I say that, and I put it in the syllabus, and I think I put it in an announcement too, there are newer versions to this book.
That cost way too much money.
This book should have cost you about 15 bucks, right? The new book cost $127. Now, you want me to tell you what the difference is between this book and the new book? They went into this book and the different charts and graphs and stuff that say 2011, they changed it to 2020. That's about all. I mean, there's a few things that's different, but the reality is that's about all they did. This is a very introductory level, and the introductory level of accounting hasn't changed in 100 years. Okay? So the principles that when this book was written back in 2009, the principles that are in that book are the exact same principles that's in the new book. They just changed the dates on the charts and the story problems so that they can charge you more money. And I'm not about more money. All right. So making sure you got the book, read through it. There will be homework assignments each week. And now on week 3, so this is week 1. You guys will have a homework assignment tonight, that I assigned tonight, that will be due. This is Tuesday, so it'll be due at midnight on Monday. Okay? And that's the way it'll go each week. It'll be due midnight on Monday. On week 3, you will have both a homework assignment and your first quiz. Okay? That's the only time I double up in the class. But in order to make it flow, I pretty much had to do that. Part of that, it initially started out was because I was teaching this class and we ended up losing a class every cycle because I was teaching the class when the Thanksgiving was happening or when spring break was happening. So I would always lose a week because my classes on Thanksgiving week always seemed to be on Thursday. So we didn't have class or Wednesday. And I wasn't about to have class on Wednesday night when everybody's trying to drive and get home for Thanksgiving. So anyway, that one will double up. But the homework assignment's a little shorter. But you do when it comes to that, and I'll remind you this on week 3. But when it comes to that one, you do need to do the homework assignment before you do the quiz, because doing the homework assignment first will help you doing the quiz. Okay. For professor knocking on the table. Do the homework assignment first. It'll help you when you do the quiz. Okay? This says we got homework, we've got quizzes, we have a final exam. The final exam really is nothing more than the third quiz. Okay, I do not do a comprehensive final exam. Basically, we're going to do chapters 1, 2, and 3, and we're going to take a quiz. And we're going to do chapters 4, 5, and 6, and we're going to take a quiz. And then we're going to do chapter 7 and chapter 10. Excuse me, we're going to do chapters 1, 2, and 3, take a quiz. Then we're going to do chapter 5, 6, and 7. We're going to skip chapter 4 because the reality is chapter 4 is nothing more, is chapter 3 on steroids. Okay, basically chapter 4 is when I'm teaching this on the graduate level. Chapter 4 is when I really mess with the graduate students. Because it's, if you want to mess your head up, go look at chapter 4. Don't do it. Okay, so we'll do chapters 1, 2, and 3. Then we'll do chapters 5, 6, and 7, and then we'll do chapters 10 and 14. And the reason I skipped to 10 and 14 is because we don't have time to get all the way through this book. But there's things in chapter 10 and there's things in chapter 14 that I think you guys need. So we'll skip and do chapters 10 and 14. Okay, so that's kind of the layout of the course. You guys have any questions about how this is going to flow? No? Okay. And then this is all of the, got to have it on there, statements that go on all of the syllabi. Okay. Now, one thing that I don't have on this syllabus that I typically put on most of my syllabi is a statement that says this. In my philosophy of teaching, the reality is this: I am responsible for, paid to move you guys from a position of ignorance to a position of knowledge. Okay, and by ignorance I don't mean you're stupid. Ignorance is simply a lack of knowledge. So I'm going to move you guys from a position of ignorance to a position of knowledge. Where my teaching philosophy comes in is that I have not done my job correctly if I haven't continued then to move you from knowledge to know-how. Okay, it's one thing to have knowledge, but if you don't know how to apply it, it's just what I call Jeopardy knowledge. It's stuff floating in your head, but it doesn't do you any good. Okay, so I will endeavor as we go through this course to be able to not only teach you the ideas that we're trying to teach, but like I was telling you earlier, I will always bring it back to management. I will be asking you questions as managers. Why is this important? You're gonna get sick of hearing that question. Okay, but that's me trying to move it to know-how. Okay, now we have an understanding. Now, how do we as managers use that data? Okay,
So basically,
so here comes one of the first fun parts of the class. Like I said, your instructor is a goofball.
So basically, knowledge without know-how is glorified ignorance.
There you go. I like that. Can I quote that?
Sure.
Okay. So can you guys see my slide?
Yeah.
All right. I'm
Yep.
going to, now let's see if I do this. Okay. Now that should have put it into a slide presentation where you guys are seeing the whole slide now, right? And not
Yes.
the stuff on the side. I don't know if you guys recognize any of the folks in that, but that was a couple of years ago, and the crowd when we were out, we got stupid in the volleyball pit. Well, let me rephrase that. They got stupid in the volleyball pit. I was the guy taking the pictures. I was the smart one. Let's see. Now, you guys should know a couple of folks there. There's Josh Fredrickson. I think he's still a student there, right?
Yeah.
This is John Oglesby when I don't know if you guys know John, but this is John Oglesby when he was still a student.
Yeah.
So this was a couple of years ago. Okay. Anyway, So why are you guys here? Ultimately, this is what you're here for, right?
Not really.
Oh, no? Wow. You're not working on a degree, David?
I am, but I don't see what the degree is above a piece of paper with gold foil on it.
Well, yeah, I understand. You're here for the knowledge that this degree represents, right?
Yeah.
Okay. So, description of the class. This is on the syllabus. You know, we're gonna work on terms referring to a set of information, concepts, and I'm not reading this slide to you guys. Your education level is such that you can read. So, but that's the description of this class. You're gonna hear a lot of war stories throughout the course of this time too. Okay, so here's the first one. I was briefing with General one time. I spent 22 years in the Army, guys. That's why I got all these war stories. So I was briefing a General one time, and I'd been briefing him for about 10 minutes. And after about 10 minutes, he looked up at me and he said, "Sergeant, would you stop for just a minute?" I said, "Yes, sir." He said, "Do you know what my education level is?" I said, "Well, sir," I said, "you're a general in the United States Army, so I know you at least have to have a bachelor's degree because couldn't be an officer without one. I'm guessing you probably got a master's degree somewhere along the line." He said, "Yeah, I did. In fact, I have a doctorate." I said, "Okay, thank you, sir." He said, "Do you think in the course of that time I learned how to read?" And I said, "Well, yes, sir." He said, "Then quit reading the slides to me, son. Tell me what's not on the slides." So that was one of my first lessons on how to brief senior level folks, you know. Don't read the slides to them. So I will endeavor to not read the slides to you guys. Okay, so college life survival guide. I used to teach the college life seminar class, so I
Yeah,
stowed
I
some
took
of these
that.
slides.
Yeah.
Stowed some of these slides from that class. Okay. Ultimately, you know, to know why you're here is understand why God's called you, your discipline, your priority, and your time at Calvary. Okay. Make sure that you take time for a relationship with God. It's serious, guys. I can't stress that enough. Okay. You're going to spend an awful lot of time in different Bible classes, in business classes that aren't Bible classes, but I trust that most of the other professors will do the same that I do and try to bring the Bible into the classroom as much as possible. Okay. But make sure that you don't let that relationship with God suffer. And one of the worst places that a relationship with God tends to suffer is when students are at a Bible college, because you get so wrapped up in the academic portion of the Bible study that you tend to let the personal side of the Bible study relax. Okay. Contrary to popular opinion, sleep is important. Okay. You guys happen to be in this class on a Tuesday evening from 6 to 9. Now, like I was telling Jacob, when I taught this class back last fall, it was on a Thursday morning at 8 o'clock in the morning. That was interesting because, you know, students got to get up out of bed, be in class. An accounting class at 8 o'clock in the morning is never fun. I teach it and it's not fun. So, okay. But anyway, make sure you get some sleep. If you need help, ask for it, and don't wait until your head's underwater. Okay, ask for it early, ask for it often. In this class, I will tell you, as long as you put forth the effort in this class, you will not fail this class. Going back to my philosophy in teaching is I have never had a student that I couldn't train, teach. Sometimes it takes additional work. Sometimes it takes trying to find a different teaching method or mechanism by which to get the information. But I have never failed a student that has tried. Okay? I make that promise to you up front. But if you need help, don't wait until you're drowning to ask for it. Okay? It is important to be in class. There are 5 folks, I think. I have to go back and look. There's 4 or 5 that are supposed to be online with us. And I think there's 2 others that are supposed to be here that aren't. And I will send them an email and again, apologize to them for getting the information out to them late. But if you've signed up to be an in-the-class student, then you need to be here with us on Tuesday evenings. If you're an online student, you do not have to be with us, but you are welcome. You're invited. In fact, encouraged, if your schedule will allow, for you to be here with us on Tuesday evenings. Okay? Communicate early and often. That kind of goes back to the help thing. If you're needing help, ask for it. If you've got information that you think the other members of the class will need, then let's get it out. Okay? Be an asset, not an oxygen thief. I don't know if you guys even remember this show. That comes from a show called House. Some of your parents might have liked it. But that was a line he used quite often, was be an asset, not an oxygen thief. And I think it's quite relevant. Again, if you're getting it and one of your classmates is not, and you can help your classmate out, here's a couple of things I'll give you up front. In this class, I encourage study groups. If you guys want to work together and study, by all means, I encourage that. When you're doing your homework assignments, it's open book, open notes, open slides, because you will have access to my slides. It's open video. If there's something in the homework assignment and you're like, wait a minute, I think he said something about that in the video, you can go back and watch the video again. It's open buddy, meaning you guys can work in study groups together if you want. I have no problem with that. On your homework assignments. Now, when it comes to quiz, it's still open book, open notes, open slides, open video. It's not open buddy or open Google. Okay? When it's time to take a quiz, I need to know what I've already promised you. As long as you're trying, you ain't going to fail. So I need to know what you know in order to know how to assist you moving forward. All right? So when it comes time to take a quiz, you can still use all of the assets available to you, except you can't do a quiz in a study group. You have to do it independently, and you can't use Google. But your book's there, your slides are there, your notes are there, any of that. Okay?
And in my personal experience, Google, even on homework, is the fast track to a bad grade.
It depends on the class. Accounting, it can be real quick. Okay? Follow the syllabus. What I will tell you is, in this class, the syllabus is, the reality is the syllabus is written fairly vague. I will tell you, follow the assignment schedule in Canvas. Okay? That is far more important, following the assignment schedule in Canvas. Do all of you know how to get to the videos? I think most of the professors do it the same way now, but you might have a professor or two that does it different. So what I will tell you is this. When it's time to watch the video, I mean, you guys are in class, but if you want to go back and watch the video again, you're welcome to it, obviously. But if you go to when you log into the class, go over on the left-hand side and hit Pages. When that comes up, go to the top left and hit All Pages. And then click on the right video for week 1, week 2, week 3, whatever. Okay? And I will send an email out with that information to the rest of the class, because there may be somebody in the class that hasn't had a class with me. I think am I wrong? Do most of the other professors do it the same way? Do they post it under Pages, All Pages?
Yeah.
Okay.
Sometimes.
I know in one of my other classes, I post it there, but then I also bring a link to it and put it in a module. But I don't use modules in this class, so. Get the book for the class. So, and Jacob, are you the one that said you don't have it yet?
Not yet. It's on its way.
Do you know when you expect it to be there?
It says between the 18th and the 21st.
Okay. Check the Warrior Cafe.
Yeah.
Okay. If there's not one there, there should be one over in the library.
Okay.
Because you're going to need the book in order to do the homework assignment, because the homework assignment is questions in the back of the chapter.
Okay.
Okay. If that doesn't work, if you go see Jennifer O'Reilly, or not O'Reilly, Jennifer Purdell, She or Alan one may still have the book from where they took the class.
Okay.
Okay. There should be somebody around campus that's got it.
Yeah.
Okay. Even if you just got to get with one of the other folks in the class and do a study group until you get your book. Okay.
Okay.
This is just there because I like the quote. Don't be stupid, and the only way you can really be stupid is to be struggling in this class and not ask for help. Okay. So that's about the third time now that there's been something on these slides that said if you need help, ask for it. You're beginning to think I'm serious about it, right? Okay. Good things happen when you set your priorities straight, and by that I mean make sure your focus is always on God. But make sure that you've got you understand what's due when in your classes. I will tell you that if you're spending more than about 2 hours a week on the homework for this class, then let me know, because you should be able to do the homework in about 2 hours. Okay, I literally have tried to make this class as painless as possible, but still get you the information that you need in order for the rigor in the class to be such that you're getting out of it what you need to have. Okay. Listen in class, ask questions. You don't want to be the one that hears "I told you so" later, because you're kind of, I didn't hear that. Well, I told you. Okay. So there's the fourth time. Okay. Now, you guys have any questions to this point? No questions. Okay. So let me stop sharing that one. And I can close that set of slides. Hush. Close. Okay, that's the slides for the class. So now, before we take our first break, we're going to do our little Excel piece. I can't believe this technology is working for me and not giving me problems tonight. By the way, I apologize about the shine on the glasses, guys. I would do this, but then I wouldn't be able to see my screen, so. So I got to have the glasses on. I'm getting old. I got old man eyes, old man ears. I got an old man body. I got a young man's mind. I tell people that I'm a 12-year-old who thinks he's 25, trapped in a 60-year-old body. Does that make sense? Because my wife tells me to grow up all the time, and I'm like, nope, ain't gonna happen. I'm gonna stay a perpetual 12-year-old. Okay. So anyway, can you guys see the Excel?
Yeah.
Okay, I couldn't remember for sure what I clicked on that. So here's the very rudimentary, basic as it gets, explanation of Excel and how we use it. Okay. Every one of these blocks has a name. We always list it by the column. I had to stop and think. We always list it by the column first, and then by the row. Okay. So this block is A1. Simple enough, right? If you come down here and you click on this block has the name too. Now, if you look, I hope you guys can see this, but when I clicked on it, see how I turned a little darker and it has the underline? And so this one is I-14. Come out here. So Excel helps you out. You come out here and you're like, wow, what's this one? Well, it's U28. Okay? So every one of these blocks has a name. A letter followed by a number. That's how we identify them, and that comes in. That's important because when we go to try to do our math problems and stuff, we're going to have values or numbers in these things, and we're going to tell Excel, we're not going to tell Excel to add, 28. We're going to tell Excel to add block A4 to block B2 in order to get an answer. Okay? So what we're going to do is I'm going to start building a little bit of a spreadsheet here. Okay? So in A, I'm going to put Dave's Pizza Shop in there. Well, you notice how that went across A and B? Okay. Well, most of the time when we build stuff, that's going to happen. All right. So I'm going to show you what we do. I could simply take these two blocks and come up here to the top, and where it says merge and center, I can click on merge and center. And now what it does is it merges those two. So now you see that's one block. Okay. Now, if you do that and you're like, oh man, I didn't mean to do that. Okay. You can click on that block again. And if you click it a second time, now it unmerges it. See now it's the smaller block again. And I say that because I say this. Most of the time, when you're putting a header on one of these things, you're going to want multiple columns in there. Okay. You may not know up front how many columns you want, but you know you're going to need more than one or two. Okay. So what I'm going to do is now watch. I'm going to click on this block and I'm going to hold my left mouse and I'm going to drag it across. And I'm just going to say, okay, I'm going to grab that many blocks. I'm probably not going to need that many, but when I hit merge and center, see how it makes all of that now one block and it centers it? Okay. Now I'm going to come in here and I'm going to put quarterly reporting. And again, I'm going to do the same thing. I'm going to click and drag over to however many blocks. So the Dave's Pizza Shop quarterly reporting. Okay. So now what we're going to do is we're going to come in here and we're going to say, okay, well, what are we reporting? Well, we know it's quarterly reporting, right? But let's say, what are we reporting during that time? Well, I'm going to say a 10-inch pizza and a 12-inch pizza, 14-inch pizza, and a specialty pizza, whatever the specialty pizza is. Okay. Well, now that would have been fine for the first three because they're all the same size, right? But we want our sheets to look somewhat uniform. So again, I'm going to grab and I'm going to double click, or I'm going to click this so that these, because the specialty pizza needed the bigger box. Okay. So these are our pizzas. Well, what are we going to do? Well, we're going to put prices in here. Okay, so I'm just going to put price. And I'm going to put Q1. Q2. And Q4. Oops. Helps if you hit the right buttons. Okay. So quarter 1, 2, 3, and 4. Okay. So let's say my 10-inch pizza sells for $8. And my 12-inch pizza sells for $10. And my 14-inch pizza sells for $12. And my specialty pizza sells for $18. Okay. Again, very simple, very rudimentary stuff. But you notice when I put that in there, Excel kind of has a default to drop the zeros off, right? And that's all fine and good when you're working with hundreds and thousands and millions of dollars. But when we're working with $8, $10, $12, and $18, we probably want to see our pennies in there, right? So let me show you what we're going to do. We're going to click on this one cell, and then we're going to right click, and it's going to give us a drop down menu. And we're going to come down here to where it says format cell. And we're going to click on that, and we get a bunch of options. Well, we're in an accounting class, right? So let's choose accounting. And when we choose accounting, it says sample. So at decimal place. So if we want to see the cents behind it, we want 2. Now, if we wanted to have no decimals, no zeros there, we can just simply do the down arrow and notice that the zeros dropped off, right? But we want to see the zeros in this case, and we want a dollar symbol to be there. Okay? So when we hit OK, now we've got our dollar symbol and we're showing $8. Now it's going to be a pain if we have to go and click, click, click and do that on every one of those, right? Well, if we know that everything in that column is going to be the same way, what we can do is this. We can click up here on the letter, and then we can right click, format cell, accounting. Now, you see when this came up, this time it didn't have the dollar sign in there. So I'm going to hit the drop down arrow, and I'm going to put the dollar sign, and I'm going to tell it OK. And you notice it did it for all of them now. So now if any number we put in here, going down this page, it's going to put it in there as a dollar value. Okay, as an example, I'll come down here and I'll put 3,228. Okay. Now, because I put 3,200,028 and didn't hit the decimal, it did it as 320,000, but you guys get the idea, right? Okay, now if you've put something in a spreadsheet and you don't want it there, it works just like Word and other stuff does. You come up here and hit that back button, it's gone. Okay. Well, if we want to know what our quarter sales were for these, so we're just gonna throw some numbers out there, okay? In quarter 1 we sold 1,223, and in quarter 2 we sold 1,247. In quarter 3, that was, school was in session, whatever, and so we sold more. So we sold 1,400, and in quarter 4 we sold another 1,328. Okay, real simple, right? That's quantity, so that's just a simple number. That's all we need in there. So I'm just gonna put some other numbers in here real quick. Just so that we've got it filled up.
Now you got me hungry thinking about different pizza sizes.
You're not the first person that's told me that. Even the girls that I had in the class last time at 8 o'clock on a Thursday morning were saying, you shouldn't be talking about pizza this early. It sounds like breakfast time. Okay, so this is how many of the different pizzas that we sold in quarter 1 and quarter 2 and quarter 3 and quarter 4. Okay, so there's a couple of different things we can now do with this information. Okay, well, the first thing we could do is we could go through and say, okay, we have all of these. How many did we sell total? Okay, so what we can do is we can come out here and say total. Okay, now how do you figure we're going to get that total?
Hit enter.
Okay, I'll hit enter. It didn't do anything, did it?
Aren't you supposed to, select the number of boxes that you want to add and then press auto sum?
Okay, well, there's a couple of different ways to do it, okay? But yes, what we're going to do is we're going to add these 4 boxes together here, okay? I'm going to show you the simplest way to do it. There are multiple ways, and if you happen to know some of those ways, somebody tells you some of those, I'm not telling you can't do them. I'm simply going to show you the simplest way to do this. So if we want this box to equal these 4 boxes added up, in this box, we're going to hit the equal sign. Then we're going to click on this box, and we're going to hit the plus, this box, plus this box, plus this box, and hit enter. Okay? Pretty simple, right? This box equals this plus this plus this plus this, and enter. Okay? Like I said, there's other ways to do this. Oops. Now, you see I messed up there, didn't I? I put my equal sign in the wrong spot. So I'm going to come up here and I'm going to say, oh, back up, back up, back up. Oh, it's still messing up. So hit enter. Once I hit enter, now I'm going to tell it to back up again. Now I'm back to where I was. So I come up here and say equals. Okay, you guys following that okay? Pretty simple, right? Now, we could add these down and get the total number of pizzas sold, but since each one of these pizzas sold at a different dollar amount, that wouldn't do us a whole lot of good, would it? What we might want to know, though, is for Q1, what was our sales for this, in dollars, for this pizza and this pizza and this pizza and this pizza, right? So, but we didn't leave enough space in our spreadsheet, did we? Here's the next step. If we need to add a column in this, what you do is you come in here and say, okay, well, right next to Q1, I want Q1 sales. So I'm going to click right next to, or in the next block, and I'm going to right click, and I'm going to hit insert. And you notice how it moved everything over to the right, and it inserted a new column there for me, right? So I'm going to do the same thing here. Insert. I'm going to do the same thing here. Insert. And now I have a column there where I can put, and you notice when I did that, it stretched the top box too. Okay. So now I want one sales. Okay. So if I want Q1 sales, if I want to know what my total amount of sales was for my 10-inch pizza, what's the math to do this one? When I say you guys aren't going to have to do math, you don't have to worry about whether you do the math and add, subtract, multiply, or divide wrong. But you guys still need to know what information has to go there. So in order to find out what my dollar sales was for 10-inch pizzas for Q1, what do I have to do?
Multiply $8 by the number of pizzas.
Okay. So here's the next. So far we've done add, right? Subtract is the same way. If we wanted to subtract something, we could. Okay, and we'll get to that. But now we're going to multiply. All right. So to do same thing, you're going to hit the equal sign. So we're going to say this box. Now to multiply, you're going to hit the star button. If you've got the number pad on your keyboard, it's the one right above number 9. If you don't have the number pad on your keyboard, it's Shift 8. So it's the little star symbol. So $8 times this box. So we sold $9,784 worth of 10-inch pizzas. Okay. We could do the same thing here. This is going to equal this times this. And this one's going to equal this times this. And this one is going to equal this times this. Okay, now, because figuring out the total quantity of pizzas that I sold really doesn't matter a whole lot to me, because each one of the pizzas sells at a different amount. But to know exactly how many pizzas, how much money I sold in pizzas, that does matter to me, right? So now, just like we added going across a while ago, we're going to do the same thing here. We can say this equals this plus this plus this plus this, and hit enter. So in Q1, we sold $77,044 worth of pizzas. Okay, you guys all tracking with me so far?
Yep.
I know,
Yeah.
I know you start to glaze over at this point, but bear with me, because I'm fixing to show you a couple of little shortcuts too. Okay, so if you understand what we're doing to this point, now let me show you something. So now we're still going to sell, in Q2, we're still going to sell our pizzas for $8 a piece, but this time we sold 1,247. So I'm going to take, this is going to equal the $8 times the 1,247. Okay, but now if we know that we're going to do the same kind of formula here and here and here that we did, you know, like here, watch this. I'm going to click on this box. See this little green box down here? Watch my big fat plus go to a skinny one. When it goes to a skinny one, if you click and hold and you drag this down, and you're like, oh, wait a minute, what happened? Well, anytime you get these little hash marks like this, what it's telling you is the number that it's trying to put in that box is too big for the box, the size of the box. So if you come up here to the top and watch what happens, we go from the big plus to the arrow. When we get to the little plus, if you double click, it will automatically size the box to the right size, and then your numbers show up. Okay. Now, this was doing the multiplication across, right, in all of those. But we also have a formula in this box. If we drag that down, does it do it? No, it doesn't do the same thing. It doesn't do the same thing because we didn't have a formula coming across like we did in the rest of these, okay? So we're still going to have to, oops, I got to come up here and hit my go away. So we're still going to have to add these going down, okay? So once you set this one up, equals $8 times the 1,400 pizzas this time. We can click on that, and then we can drag this down. You see how we're using Excel to build our formulas and stuff? Now, see this bar up here? This is called the formula bar. It's there for a reason. If you click on a box like this that has no formula in it, it's just going to give you the text of what is in that box, okay? But if you remember when we did this one, we put a formula in there to get that number, right? So when I click on this one, now instead of giving me the text that's in the box, it gives me the formula that's used to get that text. Does that make sense? That's critical because I will tell you that you need to show your homework or show your work when you're doing your homework. Okay? Show your work, show your work, show your work. Well, if you've done your formulas like this, when you upload your homework back into Canvas, when I download it and look at it, I can go see the formula you did. You guys are going to make mistakes. That's part of why you're in college, is to learn, right? But if I can see the mistake you made, sometimes you may have a thing that's got 10 steps to it. Well, if you've got everything right, and you got step 1 right, step 2 right, step 3 right, and you mess up step 4, but you did everything right in step 5, 6, 7, 8, 9, and 10, ultimately you got the wrong answer in 10, but the wrong answer that you got was because you messed up step 4. I can still give you partial credit for the exercise because I can see that, okay, yeah, you were tracking, you understood what you were doing, you just messed up here in step 4. I can still give you partial credit. If you don't show me your homework, I can't give you partial credit. Fair enough? Okay, so show me your homework. All right, you guys comfortable with that? All right, I'm going to show you a couple other simple formulas just so that you are aware of them, okay? And again, I'm just going to put some numbers in here. Okay, just no nonsense, just random numbers, okay? So to do a mathematic problem, you guys saw us doing the add problem up here. So with this block, we want to know what that this block equals this block, and then you hit the minus sign, this block, enter. Pretty simple, right? Okay. You will at times have to do what we call ratios, where you're going to do percentages. Anytime you hear the term ratio or percentages, you know there's going to be a division involved, right? So if we want to know the ratio of these two numbers right here, okay, we can say this. So this is a ratio that's going to equal this divided by, now the divided by is the right leaning slash. On your numbered keypad, it's just above your 8. On your regular keypad, it's the same key as your question mark. Okay, so this divided by this gives you a ratio or a percentage. So anytime you have to divide and get a ratio, that's the process. Add, subtract, multiply, divide. That's the most complicated it gets in this class as far as doing math. Okay? Everybody's tracking with me to this point. All right. As promised, my voice is getting tired and getting dry. So I have 7:07 on my clock. Let's be back and ready to go at 7:20. That'll give you about a 12-minute break. Okay. Typically, what I do is when we go on break, what I want you to do is mute your camera and then mute your microphone. When you come back from break and you're ready to go, turn your camera back on. David, in your case, you'll just have to say something to me and let me know you're there, and then we'll be ready to go. All right, see you guys in about 12 minutes.
I'm present. I can't hear you. You're muted. Professor, you're muted. There we
Yeah, I realize that. Do you go by Dave or David?
go. David.
Okay.
If differentiation is needed, I go by David J. It's my middle initial.
I go by Dave. That's the reason I asked.
Yeah, that's fine. That happened because my uncle David goes by Dave.
Okay. Give Ashlyn a minute or two to get back. So you guys completely bored yet?
No, I was
No.
goofing around with that Excel stuff on break.
Like I said, there are other ways to do stuff in Excel, and as the course goes along, if you know somebody and they say, well, that's the hard way to do it, you can do it like this, and you learn another way to do it, you're free to do it. Whatever method works best for you, as long as you get the right formula. I don't really care how you get the formula, as long as you get the right formula. Okay? So, can you guys see the dominoes?
Yep.
Okay. Man, my technology is working right every time tonight. I need to go knock on wood somewhere. Because it's working. I promise you that won't be the case through this whole class. I always have trouble at least one night. Okay. So, managerial accounting is the title of the book. This is the same book, believe it or not, that we use at the graduate level. I told you that when we were earlier when we were getting started, because I used chapter 4 to mess with the graduate students. Okay, it's the very same book. The difference being when we do this book at the graduate level, we go through all 14 chapters in 8 weeks, where you guys are only going to end up having 6, 7, 8 chapters. Okay, so hold on. We're going for a ride, just not quite as fast as the graduate students do. Learning objectives. David or Jacob, I'm hoping you can see this. Ashlyn and David, do you have your books?
Yes.
Okay.
Mine hasn't came in yet.
Yours hasn't. And when's yours come in, Ashlyn?
It should be in about a day or two.
Okay. So you should be. Are you on campus?
Yes, sir.
Okay. So again, if it doesn't, you guys find somebody on because I guarantee you, I've been teaching this class long enough. Somebody got this book. Okay. But what I want to show you guys is in the book, and I hope you guys will be able to see this. Okay, you see where this is the very beginning of chapter 1. You see this little blue box right here?
Mm-hmm.
Okay, that's those little blue boxes in the way this book is laid out. That little blue box is learning objective 1. Well, you see my slide is set up for learning objective 1. Okay, set these slides up to kind of mirror what's happening in the book. It just makes sense to flow through that way. So again, when you're going back to do a homework assignment or you're going back to do a quiz and you're like, that was learning assignment 3, you can go to the chapter and flip through real quick and find the number 3 in the little blue box. You can go to the slides. They all kind of match up. I did that intentionally just to make it easier for you guys to reference as you're going along. I love having this bookshelf right here. Makes it a whole lot easier to get to stuff when I need it. My last house, my bookshelf was, I had to get up and walk around the computer and the monitors, and it was over there, and it just didn't work as well. So anyway, we're going to distinguish. You weren't supposed to do that. So we're going to work to distinguish between managerial accounting and financial accounting. Now, if you guys had to guess, and if you're wrong, don't worry about it, but give me a guess what you think the difference is between the two.
You want me to go first? Nobody else said anything.
Say again?
You want me to go first? Nobody else has said anything.
Go ahead.
Okay, so I would say managerial or management accounting is what the manager needs to be concerned about. So that's going to be total sales, how much came in, how much went out to get there. And financial accounting is going to be the nitpicky stuff of how much did this item cost and where does it belong in the spreadsheet, all that sort of stuff, especially organizing it and paying bills, receiving bills, etc.
You are correct. I'm going to word it slightly different, okay? But what you said is 100% correct. The easiest way to remember the difference between managerial accounting and financial accounting is to ask yourself, who's using the information? Okay? Managerial accounting is that accounting that we do basically internal within an organization. We have to understand what our cost of goods sold was. We have to know what our manufacturing overhead is. All of those types of things. Financial accounting is the accounting that's are the numbers that's used by the people outside the organization, meaning the banks, the creditors, the stockholders, potential buyers. Okay, so they're looking at the accounts receivable, the accounts payable, all of that stuff. They're not really worried about on the accounts receivable what actually had to go into coming up with a number for the accounts receivable, or on the accounts payable, they want to know on accounts payable how much money is payable, how much of it is a credit sale, how much of it is a cash sale, those types of things. Okay, but they don't really care how many pieces of furniture were used in order to come up with that accounts payable. Where on the management side of the house, we need to know how many pieces of furniture we have to produce in order to generate the sales that accounts payable represents. Does that make sense? So just when you're trying to figure out, is this managerial accounting or is it financial accounting, ask yourself who's using the information. And most of the time, about 98% of the time, that will answer that question for you. Okay? So let's look at a couple of different accountability things, and I'll show you how these tie back in. Management, as managers, we're accountable to people outside of what we do, okay? We're accountable to our suppliers, to the government, obviously to the owner, to our creditors, to our customers. And then I think the next slide, in fact, let me just go there. Yeah, so these green boxes are stakeholders, okay? They're stakeholders in our business, okay? Now, I've had a lot of people say, you know, I can understand customers and creditors and owners and government, but suppliers, how are we accountable to our suppliers? Well, let's look at that, okay? So, as management, our accountability to stakeholders, and when we start looking at suppliers, okay? Well, our suppliers are going to provide either a product or a service to us, right? You guys will hear me a lot of times in this class, I'm going to refer back to a machine shop. I used to run, when I first got out of the Army, I went to work for Exxon. And for Exxon, I worked in a subdivision of Exxon that was machine shops. And I managed a specific machine shop for Exxon. Basically, what we did was we took raw chunks of metal and we built drill bits that went on the end of the pipe that goes down in the hole when Exxon's drilling for oil. That's what we did. We made all different types of them, different components of them. So as a manager, I have suppliers, and those suppliers are going to give me a product or a service. Well, how am I accountable to them? Well, I'm accountable to them to use the products and service to basically, I'm out to earn a profit. Well, the reason I'm accountable to them is as they're bringing me the materials, I'm earning a profit. That allows me then to come back and buy more materials and stuff from them. Does that make sense? Okay. To our employees, okay. time and expertise. They're giving us their time, they're giving us their expertise, but I'm accountable to them to provide them a safe workplace and a productive work environment. Our customers, they're giving us their cash. I'm accountable to them to supply a product and service to them that's a quality product at a reasonable price. Okay? So that's kind of how all of this starts to add in together when we start looking at our different stakeholders. As managers, how are we accountable to these different stakeholders? Okay? And it goes on. You guys can look through these first couple of charts here on your own. But, you know, like government. Well, government gives us permissions to operate. We have licenses and different things that allows us to be able to operate. Trust me, in order to be able to run that machine shop, I had to have like 15 different types of licenses to run that machine shop, okay? But I'm accountable to them to obey the laws and to pay my taxes. Because if I didn't obey their laws, trust me, OSHA would have come shut me down in a heartbeat. OSHA was always there trying to shut me down. Fortunately, my guys did the job right and we didn't have to worry about that. Okay.
All about OSHA.
Say again?
I know all about OSHA. I got fired because of them yesterday.
Uh-oh.
Over the vaccine/mask business.
Oh, yeah. Well, I will avoid that conversation because it's too much politics involved in it.
Oh, I understand.
This is an accounting class, not a political science class.
Yep. I'm just mentioning.
I could run down I could run way down the rabbit trail. You know, I'd be Alice in Wonderland if I started talking about that. So I'll leave it alone.
All right.
Okay. So financial accounting versus managerial accounting. So on this chart, the left-hand side is our financial accounting. The right-hand side is our managerial accounting. Okay. Again, like I said, financial accounting is primarily used for external reporting. Our financial statements, our profit and loss statement, our balance statement, our cash flow statements. There's multiple different statements that are done that people from outside the organization are going to look at. Where on the managerial accounting side, it's internal, it's for planning and control. Again, I have to know what my cash flow is, but my cash flow is important because that affects my ability to buy supplies. It affects my ability to make my payroll. It affects my ability to pay my fixed costs, not costs, to pay my fixed costs like my utilities and my insurance and all of those things that are fixed costs. Okay, so that's kind of the difference. You got accounts payable, accounts receivable, balance sheets versus cash flow and internal documentation. Okay. Again, going back to the second bullet there, financial accounting provides financial statements for external stockholders or stakeholders, be it the government. In reality, a lot of times as a manager, when I look at this type of stuff, I look at the owner as an external stakeholder because he may own the company, but he's external to my operations. Basically, my operations are from me down. Okay? Whereas on the managerial side, provide information that helps managers as they lead the business, the plant, the equipment, the human resources. The other big thing is that on the financial side, it's looking back. What did we sell? How much do we owe? How much is owed to us? So accounts payable, accounts receivable, that kind of stuff. Financial accounting looks backwards, where managerial accounting is usually looking forwards. So, and one of the classes we have that I think we get into in like week 5 or 6, we're going to talk about budgeting. And the first thing we have to do is budget. We have to figure out what our sales budget is. Then we have to figure out, well, if we're going to sell this, then we have to produce in order to sell it. So then we have a production budget. In order to get our production budget, once we've decided what our production budget is, then we have to do our resources, our supplies coming in, and our labor, and all of those kinds of things. So we're always looking forward when we talk about managerial accounting, where financial accounting is looking backwards. So is this starting to paint a picture for you guys? You tracking with me okay? And here's another chart. Again, I'm not going to read this chart to you, okay? But if you look at this chart, it kind of gives you, who's the primary user, the focus, the types of reports, okay, and then how managerial accounting would use it, how financial accounting would use it. You guys start to do your homework. These charts will come in handy to look at these if you have questions, because in your homework there's some questions and it's going to give you some different things and say, is this financial accounting or is this managerial accounting? Okay, so this kind of thought process that's in these charts will help you on that. And that's learning objective 1, understanding the difference between financial accounting and managerial accounting. So learning objective 2 is to identify different trends within the business environment and the role of management in that accountability. Okay, this is a very, very short learning objective, but one that's very critical in business today. Okay, in fact, yeah, it's 1 slide long. Okay, but we're gonna be here for a couple of minutes because we need to talk about it. So you guys are. I'm just going to say it. You guys are too young to really understand and remember or know much about what was the Industrial Revolution. However, you may have learned about it when you studied history. Okay? So when you hear the term Industrial Revolution, what do you think? This is your input time.
Manufacturing increase. Okay,
manufacturing increase, but if it was an industrial revolution, what was before that? Because usually when it's a revolution, we're changing from one thing to another.
Well, previous to then, people made their own stuff. I should have specified production on a large scale in a concentrated area like factories.
Right. When we went through the Industrial Revolution, basically the Industrial Revolution was from the mid-19 teens, the 1915, 1918 time frame, through about 1948, 1950 is the time period that's considered the Industrial Revolution. And what we did as a society was we moved from an agri-based society to an industrial society. People started moving off of the farms and into the cities because factories and plants were being built in the cities, and there was a lot of work and jobs to be had there. As we came out of the Great Depression into World War II, it's what allowed us to be able to ramp up into production, to be able to produce the tanks and everything that we did that allowed us to win the war. Okay, but we moved from an agrarian economy to an industrial economy. And we've been in that industrial economy from basically the mid-1940s through about 1985 to 1990. And starting in that period in the late 80s into the 90s, we really started to shift as an economy from an industrial-based economy to more of a service-based economy. Reality is, what happened was we found a lot of manufacturers found that they could build stuff in China cheaper. So a lot of the manufacturing processes went to China or to Bangladesh or to Taiwan or wherever. And our society, and by our society, I don't mean just the United States. I mean Western society, meaning the United States, Western Europe, a lot of South America even, moved to more of a service-based economy, okay? Yes, we still have industry. Yes, we still have production. But as an economy, we moved to a service-based economy. Now, the reality is most of the world is starting to catch up with us. There are still pockets of industry. China is one of the biggest, but China, India, Taiwan, and any more of the Philippines, but Vietnam is an industrial base where things are built, manufactured, and it's because the labor there is cheap. But the rest of the world is catching up with the United States and Western Europe, and as a whole, our world economy has shifted to a service-based economy. Okay. Add to that the fact that because the world is a smaller place today than it was 40 years ago, and it's an incredibly smaller place today than it was 100 years ago. Now, the reality is the surface of the earth isn't any smaller. But the reason we say that the world is a smaller place is because our mode of transportation, our ability to get from place to place, has greatly enhanced. And even more so on top of that, in the last few years, has come the advancement of information. Okay. Have you guys ever not had one of these?
Yeah, I didn't get my first one until I was 15.
Okay. Jacob, when did you get yours?
When I was 15.
Ashlyn?
Like 14 or 15.
Okay. And that's typical for the kids your age right now. I have granddaughters now that are 11, 12, and 13, and they all have one. I even have a grandson that's 7, and he's got one. Now, mind you, the 7-year-old, the only thing he does on his is play games. But he's got a phone. Okay? I swear what we need to do is just take a little cable and plug it into the bottom of the phone and just plug it into the back of y'all's ear and let you guys do an instantaneous data dump. But my son would say, no, Dad, we just plug a dongle into the back of our ear and do it by Bluetooth. Okay? You guys don't know anything other than a digital age. Now, what's wild is, to me, that seems foreign. I don't know. Do you guys know what the Commodore 64 computer is? No. Oh, man. You guys are going to kill me. Ah! Oh, I'm getting old. The Commodore 64 was the first, for lack of a better term, large-scale production of a home computer. I didn't have one growing up. I didn't have my first Commodore computer, in-home computer, until I was 21 years old. When I was your age, most of you guys are what? Between 19 and 22? Maybe younger?
18.
18.
Okay.
19.
You guys' birthdays start with a 2, don't they?
Yep.
Yeah.
No.
No. What's the year of your birth?
03.
Huh?
03.
2003.
2003. It
Oh.
starts with 2.
I thought we were talking about the last 2 numbers. I was like, wait a second.
No. Your birthday starts with a 2. Nah. Y'all are babies. And you get younger every year, it seems like. It's not you, it's the ones coming behind you. Anyway, see, boom, bang, bang. You guys will see me from time to time reach over and shoot. I'm shooting a rabbit because I ran down a rabbit trail. Okay. What was I talking about?
Business trends, the move towards a service economy.
There we go. Look at your slide, David. It'll explain it to you. Okay. So advanced information systems. Have you guys all seen the movie Apollo 13 by chance? No. Do you know what Apollo 13 is?
Yep.
Okay, it's a space movie. Tom Hanks starred in it. Okay, but it's about the moonshot Apollo 13. Well, Apollo 13 was on the way to the moon, and they had a problem. And they, instead of landing on the moon, they had to do a slingshot around the moon and come back. They couldn't land because they were having a problem. They were about to run out of oxygen. Okay. Well, Apollo 13, most of the computers, here, this will work. Most of the computers on Apollo 13 were CPUs that were about this size. Okay? And those CPUs on Apollo 13, they had 22 of them that were that size. Okay? Now that bookcase is probably 2 feet by 2 feet. It's probably about a 2-foot cube. Okay? In relative space. They had 22 of those on Apollo 13. I have more computer power and technology right there than that entire spaceship had. Okay? The equivalent computing power of this phone would have been about 3 times the equivalent computing power that that entire space capsule had. Okay? So we have moved to advanced technologies. Moving to advanced technologies, one of the things that you guys have seen just in the last 2 years is the explosion of e-commerce. Okay, I remember when there never was a thing called Amazon. Do you guys? Maybe, right? Okay.
Yeah, maybe.
Okay. I remember when there was never a thing called Amazon. You couldn't pick up your phone, order something, and have it delivered at your house the next day. If you wanted something, you had to take your butt and go down to Kmart or Walmart or Target or whatever store was around then before Kmart, Walmart, and Target. Okay? So we've moved to an e-commerce society as well. The ability to pick up your phone or get on your laptop, order something, and have it delivered to your house in a short period of time. Maybe not, some things overnight, some things not overnight. Sometimes it actually takes 2 days to get something there. Okay? But one of the key things for us as managers, especially when you start talking about manufacturing processes, is these next 2 concepts, and that is the just-in-time management. Okay? And when you start talking about just-in-time management, 90% of the time when you're talking just-in-time management, you're talking supply chain management, okay? And the concept behind that is if I'm a businessman and I'm drilling a hole out in the middle of West Texas, and I'm going to drill a hole into the ground, and I drill an average of about 300 feet a day when I've got my drill going. Well, obviously, if I'm going to drill 300 feet of pipe today, or 300 feet of hole today, I need 300 feet of pipe going down in that hole, right? Well, chances are I'm going to bend a pipe or two. So I probably ought to calculate on having 500 feet of pipe in case I bend a bunch. Okay? Well, if I know I'm going to use 500 feet of pipe a day, and I'm going to do that for the next 30 days, okay? Well, do I need 150,000 feet of pipe on day 1 when I start drilling? No, I probably don't, right? But I probably need more than 500 feet, right? Because it's going to take you a time to get me some pipe there, because you're not going to deliver pipe every day. So as a manager, what I'm going to do is I'm going to say, okay, I want to keep about 7 days supply of pipe on the ground at any given time. Okay? So if I know that if I know I'm going to get pipe delivered every Wednesday, okay, well, on Wednesday, when I get up and get started working that morning, I need to have about 3 days, no less than 3 days supply of pipe. So I've got 1,500 feet of pipe. And then on Wednesday, I'm going to get another week's worth of pipe delivered. Well, I'm going to get 35,000 feet of pipe, right? Because I'm going to get 500 feet of pipe. Or 3,500 feet of pipe. I'm going to get 500 feet of pipe times 7 days worth of pipe. Okay, so I'm going to get 3,500 feet of pipe delivered on Wednesday. Well, if I started off with 1,500 feet, I got about 4,000 feet. Okay, so about 4,000 feet is kind of my cutoff point. I don't really want more than about 4,000 feet of pipe on my site at any given time. But when I go to my supplier and I order that 35,000 feet of pipe, I tell him, look, I need 35,000 feet of pipe. And what I need you to do is deliver 14,000 feet of pipe on this day, or 1,400 feet of pipe. No, I can't do math in my head tonight, guys. I'm sorry. I need 4,000 feet of pipe on site on such and such a day. And then what I need is every week, once a week, I need you to deliver another 3,500 feet of pipe. That's called just-in-time management. I'm getting it delivered from my supplier just in time for me to use it. Now I keep myself a safety buffer there so that if for some reason the truck delivering the pipe has a mechanical problem and instead of getting there on Wednesday, it doesn't get there until Thursday, and it might not get there until late Thursday, I don't want to run out of pipe and have to stop drilling. So you always have to build a safety buffer in. But I also don't need 35,000 feet of pipe. All I need is 3,500 feet of pipe at any given time. Does that make sense? Okay, so that's just-in-time supply management, and it works both ways. Okay, me as the customer, this is what I need. Well, the guy who's supplying me that pipe, he has to then say, okay, if I've got to deliver 4,000 or 3,500 feet of pipe or 4,000 feet of pipe, however much I'm delivering on any given week, then I have to figure out, okay, I have to then back plan how much pipe do I need, when do I have to put that pipe into production in order to get it out of production in order to deliver it. Because if I'm delivering it on Wednesday, well, I probably got to load it on a truck on Monday. Well, if I'm loading it on a truck on Monday, that means I'm probably done manufacturing it on Saturday. And in order to be done manufacturing on Saturday, I have to start manufacturing it, 2 Saturdays before. And in order to be done, in order to start manufacturing it 2 Saturdays before, I have to order the material 3 weeks before that. It's kind of called reverse engineering. And that's how the supply chain works. So that the metal coming out of the metal yard that becomes the pipe that gets loaded on the truck that gets delivered, there's a timeline to all of that. If any of that breaks, we mess up in our just-in-time management, and sometimes that guy that's out there drilling the hole ends up sitting there twiddling his thumb, and he's not a happy camper, because if he ain't drilling, he ain't making money. That's one of the drawbacks to just-in-time management. It would be a whole lot safer for the guy to have 10,000 feet of pipe on the ground and not have to worry about it. But let's say he's drilling for oil and he expects to hit oil at 9,000 feet. But he orders 10,000 feet of pipe expecting he's going to bend some pipe. But as he's drilling, all of a sudden he hits oil at 3,500 feet instead of 9,000 feet. Well, now he's got a whole bunch of extra pipe sitting around because he didn't need it. Make sense? Okay. And then total quality management, that goes into that gets into the quality management and the thought process that in order to do total quality management, we don't just look at the quality of the product at the end state to say, do I have a quality product that I'm putting on the truck to ship out? Okay. As a total quality management program, what I'm doing is I'm checking the metal when it first gets to my shop. Does that metal meet the specifications that it was supposed to meet from what I ordered? Are the tools that my machinists are using, are they quality tools, and they're going to do the right cuts on the metal the right way the first time? Or did somebody supply me with a lesser quality tool and now I'm starting to have damage as I'm producing stuff and I'm getting bad product out the other end? Well, as I'm backing up, if I'm doing total quality management, I'm checking the quality of this product all the way through the production, not just at the end of the production. So that's kind of the concept. That goes a whole lot deeper, and trust me, I could build an entire 3 credit hour class just on total quality management. Okay, there's a lot involved in that, but just kind of a big overview. Understand that total quality management is the concept of checking for quality all the way through the production process, not just at the end when the product is done. Okay? I get something to drink again. And that one slide took us a while, but that slide's important because that's a concept that will carry on not just in this class, but in other classes as you go. At least if you take classes that I'm teaching. Okay. So we're going to classify cost and prepare an income statement. Oh, now we're getting into it, right? Come on, you guys. You lost your smiles. Okay. We're going to talk about 3 different kinds of companies. We're going to start off with a service company. When you hear the term service company, what's the first kind of company that comes to your mind? Every one of you give me a different one. Jacob, tell me what a service company is. Tell an example of a service company.
A retail store.
Okay.
Think about it.
David, actually,
Cashiers.
a retail store is probably not, because a retail store is probably going to have to buy product from somebody that they turn around and resell to you, right?
They do, but they still offer service.
Yeah,
So-
they do. But a retail store falls more into the next category, which is a merchandising company. Okay? But think service company. They're providing a service.
Gunsmith.
A gunsmith would be a good one. Jacob?
I mean, along that lines, a locksmith or something like that.
Okay. Ashland, it is Ashland, right? Am I saying that name right? Okay. Think of a service company.
Oh, I can't think of one off the top of my head, if I'm being honest.
Okay, that's fair enough. Just be prepared, because as we go through this, I'm going to be asking these types of questions. Okay.
Okay.
But when I think of service companies, there's 2 or 3 that popped in my head right away. Okay. First one is a lawn cutting, grass cutting service. Okay. The next one that I think about is a taxi cab or an Uber. Okay. When you think about a service company, basically you're talking about a company that provides a service that they're not really selling a product, they're selling a service. Okay. That's why the lawn cut, when I was a teenager, I had my own lawn care company. Okay. That's why that's the first one that always comes to my mind. Okay. I made lots of money cutting grass. It was a walk behind push mower, but I made lots of money cutting grass. Okay. But usually service companies are going to provide a high quality product. Okay. Product in service. Okay. They're going to do it at a reasonable price. They're going to do it in a timely manner. They really have no inventory because they're providing a service. I didn't have any inventory that I was selling my customers. What I was selling them was my labor. Now I had costs because I had to buy my lawnmower, I had to buy my oil, I had to buy my gasoline, those kinds of things. I had expenses, but I didn't have an inventory. I wasn't selling a product. I was selling a service. Okay. And all of my expenses, when I first started teaching this class, I started thinking back to when I actually did this, and all of my expenses basically are expensed in the same period, because the bottom line is, if I got to go back buy gasoline, I got to pay for the gasoline right now. I can't go buy gasoline and pay for it next month. At least I couldn't back then because I didn't have a credit card. Okay. So when we talk about service companies and expenses, and expensing the cost process, we expense it out at the same time period and when it occurs. If it happens in the month of January, it happens in the month of January. If it happens in the month of July, it happens in the month of July. Okay. So that's a service company. Okay. And the way we look at their income is their net income is their revenues. How much money did I get paid for cutting 16 people's yards versus my expenses? How much did it cost me for my gasoline and my oil and sometimes my tennis shoes because I wore my shoes out walking so much? Okay. But our net income is our revenues minus our expenses. Okay. There's really no cost of goods sold because I'm not selling a good, I'm selling a service. Make sense? North and south, David?
Yep.
Okay.
I just been cutting my mic, so I got a heater running.
Oh, that's fine. Since I can't see you, sometimes you got to say, yep, got it, I'm tracking. Okay. So instead of looking at a service company, now we're going to look at a merchandising company. David, this goes more to what you said a while ago, a retail store, okay? So Jacob, think of another service or excuse me, merchandising company.
Champion.
Okay. Now, you didn't buy that at a Champion store though, did you?
No, I didn't.
Probably bought it at a Target or a Lowe's or
Yeah.
not a
Walmart,
Lowe's,
something
Target
like
or a
that.
Walmart or something like that, right?
Yeah.
Okay. Ashlyn, can you think of another merchandising type company?
Nike. Yes.
The reality is that when you look at a retail store, that's pretty much the kind of encompasses all of them. When I think of a merchandising company, the first thing that comes to my mind is Walmart.
Oh, okay.
Walmart will sell you anything in the world. Walmart makes absolutely nothing. Right? They don't make anything. They buy it from somebody else and they sell it to you. So they're a merchandising company. Okay? So they have to keep inventory of products. So they've got inventory. So they've got a cost of goods sold because they buy it for a certain amount and then they sell it for a certain amount. Well, there's a process in there calculating the cost of goods sold to know how much did we sell in any given month and what was our cost of the goods sold that month. Okay? Kind of a couple of concepts that we need to keep in mind is that product costs flow through the inventory. Okay, so we have a beginning inventory, we have our purchases, we have what we sold, and we have our closing inventory because our closing inventory this month becomes our beginning inventory for next month. So that's the inventory process. Okay, and the way we figure our product costs is we have to know how much did we start with, how much did we buy, how much did we end, tells us how much we sold, and that's how we calculate things. Okay. Here's the first accounting phrase you guys are going to learn, GAAP. Just pronounce it GAAP. Okay, and that's generally accepted accounting principles. That's what that acronym stands for. Okay, basically what that says is GAAP, when you're talking about a merchandising company, requires companies to keep inventory product cost as an asset until it's sold. Meaning, if I have it in inventory and I haven't sold it yet, I can't count it as a cost of goods sold. I have to count it as an asset. Okay, and we'll get into assets and debits and credits later, but just for now, and just understand that GAAP, generally accepted accounting principles, says if I'm a merchandising company and I've got inventory that I haven't sold yet, it's considered an asset. There are some things as we go through this class that I will tell you guys, just accept it. I could explain to you why it matters or why it is what it is, but the reality is it doesn't really matter to us as managers a lot of times. It's just a given fact, and sometimes it's easier just to accept it as a given fact than to try to understand it. This is one of those, okay? I could explain the whole accounting principles, theories behind all of it, just accept it, okay? So, our product costs. We have our beginning inventory plus our purchases, and it says purchases net. And the reason why it says net is because most companies, like Walmart or Target or Lowe's or any other manufacturer, any other merchandising company, they're going to have a certain amount of returns. So you can't just say beginning inventory plus purchases, okay? Because sometimes you purchase stuff and it comes in and it's bad and you have to send it back, okay? So we calculate our net purchases, those things that we purchased and kept. Okay, again, for the purpose of this class, that's the only time I'm going to talk about stuff that we purchase and send back. Now, later we'll talk about stuff that customers purchase from us and bring back to us. but for the purposes of this, just understand it's beginning inventory plus purchases. You don't have to worry about net anymore, okay? Plus freight in. And the reason the freight in is critical is because when we buy stuff and we have to pay to get it shipped to us, there's a cost associated with getting that stuff shipped to us. And we have to spread that cost out across our product. So if I buy 100 pieces of something and it costs me $10 to get those 100 pieces delivered, well, if I divide the $10 by the 100 pieces, it costs me what? 10 cents a product to get it delivered? Okay. So my product is the cost of the product plus 10 cents because of the delivery expense. Okay. So when we're calculating cost of goods sold, we have our beginning inventory plus what we purchased plus the amount of cost, freight it costs us to get that in. Okay. Then at the end of our period, whatever's left over is our ending inventory. So it's beginning plus purchases plus our freight minus however much we have left over, and that's going to equal our cost of goods sold. Pretty straightforward. You guys tracking with that? Because I'll tell you now, you're going to have a homework assignment that's going to follow that chart. Okay? So product costs. Product costs are part of our inventory, and they're expensed only when they're sold. So if we keep it in inventory, we don't expense it. Okay? A period cost is not part of the inventory. So if you're in a manufacturing company, let's just say Walmart, okay, and you're buying a whole bunch of product and you're selling a whole bunch of product, well, that's going to go through your product cost. But what kind of cost are you going to have that would be a period cost that's not part of your inventory?
Electric bill, water bill.
Yep, fixed
Rent.
cost, your labor, those kinds of things that are not part of your inventory. Whether you sell your inventory or not, those costs are still there, right? And those are period costs. Those get charged off each month as they happen. Make sense?
Yep.
Just remember, you guys are going to hear the word cost, costing, cost model a lot through this course. Understand each week as we go along, the word cost is going to be used differently in different formulas that we're using. Okay? This is the very basic building block for us to understand. And we're talking about product cost versus period cost. Product cost is the product that we purchase and sell. And we only get to expense it when we sell it. Okay? So that same exercise or thought process we were just doing is reflected in something that would look something like this in a statement. Okay? An income statement. Our net sales, oh, excuse me, how much did we sell our stuff for? Okay, well, we have to come up with our net income at the bottom, right? Well, to come up with our net income at the bottom, we have to know what our cost of goods sold were. Okay, well, if we sold $2 million worth of stuff, and our cost of goods sold, the materials that we sold, what it cost us was $180,000. Oh, excuse me, $1,800,000. So now we've got net revenues of $2 million. We've got cost of goods sold of $1,800,000. Where our gross profit, and the reason it says gross profit is because right now the only thing we're taking into account is the cost of the goods that we're selling. Okay. We've got $200,000. Well, then we've got operating expense. Okay, operating expense is usually those things that fall into the category of your rent, your labor, those types of things. Okay, so let's say we've got $100,000 in operating expense. Well, now we are a gross profit of $200,000. We got operating expense of $100,000. Now we've got operating income of $100,000. And then we've got other income expenses. Okay, well, what kind of stuff falls in other income expenses? Well, you got mortgage on your building. You've got taxes. You got and every business is a little different, and they will structure their books a little different. But you've got different. Some people would instead of breaking down the other income expenses and the operating expenses, some people would have just put it as fixed expenses. This is going to be charged out every month as a fixed expense. Period. Okay. So every company is going to set it up a little different. But you see how that process works. Can you guys see the cursor? Okay. So our sales minus the cost of the goods that we sold gives us our gross profit. Minus our operating expense, which is our rent and our utilities and our insurance and our labor, gives us our operating income, minus our other income expenses being our mortgage, our taxes, that kind of stuff, ultimately gets us to our net income. Here I put some numbers to it. Okay. So $128,500 in net sales. Our cost of goods sold, our beginning inventory was $7,400. We purchased $62,800. Now you notice I didn't put a freight in there. I may have had a freight cost, I may not. If I did, a lot of times company will just absorb the freight cost in the purchase cost. They add them all together and just put it as one line. Okay. So I had $62,800 in purchases. So I had $6,000 in ending inventory. Well, if you take this plus this minus this, I get $64,200 in cost of goods sold. Well, if you think back to this chart, net sales minus cost of goods sold gives us our gross profit. So our net sales minus our cost of goods sold gives us our net profit. Okay. Now we have sales and general and administrative expenses. Here's another phrase that you guys are going to hear a lot: SG&A, sales and general and sales, SG&A, sales and general administration. Okay, sales and general administrative cost, SG&A. Okay, in this case back here they broke it down into a couple of different expenses. Okay. In this case, SG&A is kind of all rolled up into one. So we have our sales minus our cost of goods sold gives us our gross profit, minus our SG&A gives us our net income. That makes sense? Seeing the numbers in it a little, help you track a little better? Okay. So exercise 1, cost of goods sold. Okay, so let's look at this. Our cost of goods sold. Now what we're going to do is we're going to figure out what it costs us to sell one item. Okay. Unit costs. This company sells brushes. Okay. So if we take our total cost of goods sold and we divide that by the total number of units that we sold, we're going to get our cost of one brush. Okay. So let's back up. In this case, the cost of goods sold was $64,200. Okay, so I used the same number on this chart, $64,200, divided by, and this is the story in the book. This is one of the story problems in the book. Normally I put it on the chart which one it is. I just forgot to this on this slide. But if our cost of goods sold was $64,200 and we sold 5,700 brushes, the way we get the cost of one brush is to say the 64,200 divided by the 5,700 brushes tells me that my cost to sell one brush is $11,026. Does that make sense? So the total cost of goods sold divided by the number of units gives us the cost per unit of what we sold. And that ends learning objective 4. That's merchandising companies. Okay. So now what happens if we're a manufacturing company? Now we got another layer of stuff to add on here. Okay. Because we have our cost is our materials, but we also have work in progress inventory and we have finished goods inventory. Because remember, if it's in our inventory, it's an asset, we can't count it into our cost of goods sold, right? Same thing in a manufacturing company as in a merchandising company. Okay, so we have direct costs and we have indirect costs. So our direct costs, the kinds of things that go into our direct cost category is obviously direct labor. If I can say this labor is directly accountable to this process, it's direct labor. A good example of that, when I was working in my machine shop, like I said, you guys are going to get sick of hearing about my machine shop, but I had a whole bunch of machinists. And I could tie the machinist labor directly to a specific product. Direct labor going to a direct product. Okay. However, I had two guys on my team that were maintenance guys. One of them was a building maintenance guy, and the other one was a machinist maintenance guy, meaning he fixed the machines. If I had one of my CNC lathes go down, they'd call Toby, and Toby would come over and he would do his thing and he would get that machine working again. Okay. Well, his labor I couldn't count as direct labor because I couldn't count his labor directly to a product that I was making, because he may be working on 7 different machines during the course of a day. And every one of those machines was tied to a different product line. I still had to pay him. He was still a cost, but he fell into that category of an indirect cost because I couldn't trace his labor directly back to a specific object. So his labor became manufacturing overhead or an indirect cost. But the things that are direct costs is direct labor, direct materials. If I'm buying a chunk of metal that's going to go into a drill bit A, I can tie the cost of that chunk of metal to that drill bit A. Okay. So inventory product cost, okay, direct materials, like we talked about, direct labor. So these are the 3 types of costs that we have associated with a product. We've got direct material, direct labor, and then we've got manufacturing overhead. All of those other expenses that goes in that we have to pay in order to make that product. And if we don't account for those costs, we're going to end up not selling the product for what we need to sell it for in order to make the money we need to make. Okay? If we don't account for our indirect costs or our manufacturing overhead, we're going to go broke real fast. So what is manufacturing overhead? It includes only the indirect costs related to manufacturing. Okay? It does not include sales, general administrative functions. In other words, if I have a manufacturing company, my machine shop, I can tie the cost of the machinists that are doing the work. I can tie the cost of the material. Even in an indirect cost, I can tie the cost of the mechanic, or I can tie the cost of the electricity that runs the building, that runs the machines. That's an indirect cost. However, the lady that's sitting up in the head shed who does payroll has nothing to do with the manufacturing process. Now, I still at some point in my spreadsheet have to account for her labor costs, but she falls in that SG&A category. She does not fall in the manufacturing process. When we start looking at manufacturing costs, it's direct costs, which is direct labor, direct materials, and our indirect cost, which is our manufacturing overhead. Okay? Sales cost, if I've got a salesman and I'm paying him a commission. If I've got a delivery truck that's delivering the product after I've sold it, that is not part of the manufacturing cost. Now, if I'm paying for material to be delivered to me, that's part of my manufacturing cost because that's part of my cost of goods sold. But my delivery after the fact is not part of my manufacturing cost because I'm going to have to pay the cost to manufacture that, whether I deliver it or whether the customer comes and picks it up. Make sense? Okay. So just remember, anytime we're talking about manufacturing costs, Delivery expenses are always after the sale, so that's not a manufacturing cost. Okay. Other manufacturing overhead stuff. You know, we talked about indirect labor, meaning the machinist, okay? Or, but other things is, you know, the repairs and maintenance, okay? That's here. Utilities, rent and insurance. If I'm renting a building, well, I have to have the building in order to manufacture whatever I'm manufacturing. So I can count that rent and the insurance on that building. Property taxes, depreciation, okay. Depreciation is a tricky thing. Okay. So how do I want to explain this? If the thing that we are depreciating is involved in the manufacturing process, then we can count it as a manufacturing overhead. Meaning, if I went out and bought a $500,000 lathe in order to turn metal for this part that I'm making, and I'm going to depreciate the cost of that $500,000 lathe at $100,000 a year over the next 5 years. Well, then for the next 5 years, I can take $100,000 of the cost of that lathe and add that into my manufacturing overhead. If, however, I go out and I buy a semi to deliver my product once I'm done, and I spend $500,000 on that semi, and oh, by the way, those things can get expensive. And I'm going to depreciate that semi for $100,000 a year over the next 5 years in order to do the depreciation on the truck. The depreciation of the truck is not manufacturing overhead. Does that make sense? The lathe is directly involved in the manufacturing process. The truck is not. So you have to, when you start talking about depreciation, you have to understand, is the depreciation for something that's involved in the manufacturing process. Okay? And I whether it's this week or next week, we start talking about depreciation of a saw for a furniture manufacturing company and a delivery truck. The saw is part of the manufacturing process. It's kind of hard to manufacture furniture if you don't have a saw to cut the wood. But the delivery truck that delivers the tables after they've been made isn't part of the manufacturing process. Okay, so manufacturing company income statement. This basically is the very same thing we just did. Let's see, no, I didn't. So our net revenues minus our cost of goods sold gives us our gross profit minus our, so it's the very same process as that one we did before where we actually put numbers in. Okay? It's the same thing for a manufacturing company as it is for a merchandising company. The only difference is here, this company is not accounting for manufacturing overhead. Okay, they're only accounting for their cost of goods sold. My guess is when this one was drawn up, their manufacturing overhead is considered a general administrative expense. Again, every company is going to set their books up slightly different. Me, I want as much fidelity and information as I can, so I would break all of that stuff out. Okay, so a comparison of products and period costs. This is kind of backstepping a little bit, but okay, so and if you've got a service company, obviously there's no inventory, so you're not going to have any product cost in a service company, right? Everything is going to be a period cost. For a merchandising company, it's going to be your product cost is going to be the purchases, the stuff that you purchased plus any freight that you had. That's a product cost. Okay, your salaries, depreciation, insurance, all of those fixed costs go over in that period. On your manufacturing company, your direct material, your direct labor, your manufacturing overhead is a product cost. It's the cost involved in the product. And again, you can't expense it until you sell it. Where all of those other things, the office salaries, the depreciation, utilities, all of those fixed income or fixed costs are period costs. They're going to get expensed out at the same time that they happen. Okay, so we're going to look at a balance sheet. How does it flow? Material inventory. We purchased material. Goes into our material inventory. Okay. Direct labor is our inventory process. Our finished goods inventory basically is the stuff that we've done, that we've completed. Okay. When we sell it, it goes to our cost of goods sold. So our income statement is our cost of goods sold, or excuse me, is our sales minus our cost of goods sold minus our operating expense gives us our operating income. This is just a graphic chart to demonstrate this. Okay. This part right here is this part. This part right here is the revenues minus the cost of goods sold minus the operating expense gives us our operating income. Okay. This is a manufacturing company that has it broken down a little further. Okay. So we have our beginning work inventory. What's the value of the stuff that we have that's in work? Our cost of materials that we purchased, direct materials used, our manufacturing costs. Okay, beginning inventory. This is now we're talking about work in process stuff. Beginning inventory plus our direct materials used plus our direct labor plus our manufacturing overhead. Okay, gives us our total manufacturing costs. Beginning inventory, beginning work in progress. This is stuff that's already in progress. We add to it the materials that we bought, plus the labor that we used, plus the overhead gives us our total manufacturing costs. Minus what we have left over at the end, stuff that's still being worked on that's not completed, gives us our cost of goods manufactured. Kind of like our cost of goods sold, okay, where we had a beginning inventory. What did we buy? What did we have left over? Gives us our total cost of goods sold. Well, if we take what's in our beginning work in progress inventory, add together these, subtract out what's left over that we didn't finish, gives us our total cost of goods manufactured. And I'm starting to get the deer in the headlight look. I got it. We're almost done, guys. This is a nice, fancy, good to have, makes sense chart if we were talking about it an hour and a half ago. Okay. The reality is I'll get more in depth into this when we get into a later class. So let's just take a short little. So our beginning work inventory is $6,000. Okay, direct materials, we added $15,000 worth of direct materials. We had $7,000 worth of labor. We had $18,000 worth of manufacturing overhead. So our total manufacturing occurred. Add these up, you get $40,000, right? So if we had $6,000 to begin with, we've got another $40,000. Our total manufacturing cost to account for is $46,000. But we got $3,000 left over that's still in process that's not done. Okay? So our total cost of goods manufactured is $43,000. Does that make sense? I know the numbers make sense. How we got to it. Does that make sense?
Yeah, I think so.
Jacob, Ashlyn? Kind of, sort of, maybe?
So. Yeah.
About as clear as Mississippi mud? Okay. And I'm gonna, okay, so here's what I need you to do. Okay, you guys, so Jacob and Ashley, you don't have the book yet, okay? So
No.
what I'm going to do is I'm going to walk you through a process. This is also as much for the folks that are watching the video as well. And when you guys, like I said, find somebody that's got the book. This book is on that campus, okay? There's enough folks that are around there that should still have it. Okay, so if you go to the end of the chapter, I'm going to show you a couple of things at the end of the chapter. So the end of chapter 1, the problems start on page 24, okay? And you'll notice there are S1-1, S1-2, so that's short exercises. Okay, you get through a number of short exercises, and you get to E, which is exercises 1-14. So you go from S1-13 to E1-14, so it just continues numbering. Okay, and then you get to P 1-23A. So you go from E1-22 to P1-23. So again, it continues to number. All right, you guys all have your computers, right? What I want you to do is this. I want you to go into Canvas. You should already be there. If you're not, I'm going to show you a couple of things real quick. Okay. Is everybody into our class in Canvas?
Yeah.
Ashlyn, you there? Are you getting there?
Getting there.
Okay. While you're getting there, so over here on the right hand side, the same place you're going to go to find, because you're going to go to find the video, you're going to go to pages, all pages, and then when we're done tonight, there'll be week 1 video, right? There'll be the next entry here, okay? But if you come down here and go to files, and you come over here and look and you see slides, you can click on that slides button, and you can go to chapter 1, and that will pull up all of the slides that we went through tonight. Okay, so that's how you go to use the slides when you need to for doing homework. Now, my suggestion to you is that when you do that, you download it and you view it in PowerPoint, because they were designed in PowerPoint. So you notice there was a couple of slides where I got to the slide and I went click, 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 and more stuff populated. Okay, if you do that here, you're going to get to that slide. Okay, and eventually I'll find it. You're going to get to that slide and it's just going to have the whole slide populated. But if you want to do the click, 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 click thing, you have to have it in PowerPoint in order to do that. And some of the slides, it's going to be stuff on top of stuff on top of stuff when we get into other weeks. So you definitely want to learn to do it in the PowerPoint. Okay, so that's one thing. But let's go to assignments. We will go to assignment 1. Okay, here's what you guys are going to do. You're going to download this assignment. So click on this little down arrow. It's going to download it. You're going to open it. Once you open it, take it a minute, okay? Once you open it, you want to save it to your desktop or wherever you want to save it on your computer. So download it and save it, because you're going to work it on your computer, and then when you're done, you're going to go back into Canvas and you're going to click and you're going to upload it. Okay, that's the way we're going to do this class. You guys are going to do, you're going to download it, you're going to work it on your computer, then you're going to re-upload it to Canvas. All right, so if you look where I was telling you, like on the homework or the problems at the end of the chapter starts on page 24. So S1-1, so the very first one, okay? So it comes in here. Now, you guys need to always make sure that you look at the problem in the book, because I could do a typo here. But here you're going to identify there's 6 things here, and you're just going to come out here in this block next to it, and you're going to tell me either MA or FA. Is this manufacturing overhead? Or excuse me, is this managerial accounting or is this financial accounting? Okay, back to that stuff we talked about an hour and a half ago. So you're going to identify these 6 processes and figure out, is it manufacturing, or excuse me, is it managerial accounting or financial accounting? Okay, and then you're going to get to 1-4 and you've got a story problem here. Now I will tell you, and I apologize to you guys because your teachers did not do you right. At least your generation as a whole. Your teachers didn't teach you guys how to read story problems and work them well. At least that's my experience teaching this class. The biggest problem most people have when they're doing this class is they don't know how to read the story problem and pull the pertinent information out. Because I will tell you that as we go through this class, the writers of this book, they will give you information that you don't need just to confuse you. All right? But you're going to come through here and you're going to read this. So Martin Reynolds provides haircutting service for in the local community in January. See, that should say business, not budness. Told you, there's typos. I hadn't caught that till just now. Okay, but there's hair supply expenses, there's building rent, there's utilities, there's depreciation on equipment. So you have to figure out where to put that information in here to come up with the net income. Okay. So once you plug the right information in, then you can do your formulas. Okay. And this is, what is the cost of one haircut? Well, remember back to the slide where we figured out the cost of goods sold divided by the number of brushes to get the cost of one brush. Okay. It's the same process here. What's the total cost of operating minus the total number of haircuts that we did to get the cost of one haircut. Okay. Now in this case, I put the information in there. In this case down here, I built you a chart, but I didn't put the information in there. You guys have to start to plug the information in. Now I will tell you, remember, just like we talked about, if we needed to add a column going down this way where we needed to make this a column wider, we can do the same thing on lines. So if you're doing this and you need an extra line in one of these charts, I don't know whether you do on this one or not, but let's say you need an extra line right here. You just click on it, right click. Oh, you got to come up. When you guys download it, go up and hit that button up there that says enable editing. Okay. So you just come here, you click on the number. Don't click in the box out here. Click on the number on the right, on the left-hand side, then right click, hit insert, and it'll insert, make another row there. Okay. You guys good with that? Or an extra line? So in this exercise, you're going to do 1-1, 1-4, 1-5, and then P123. Okay. So this is basically P123 is kind of taking all of these first 3 that you do up here and adding them all together into one bigger problem. All right. So there's only 4 problems. Now, granted, this one will take you a little bit longer because there's a little more involved in it. Okay. But you're going to figure out what's the cost to do 1 foot height in tree service, and once you do 1 foot height in tree service, decide whether the manager made a bonus or not. Okay. Again, if you struggle with this, you can work in groups. If you need to, you can send me an email, and we can set up a time where we can kind of do some one-on-one on a Teams meeting one night, and I'm more than happy to help you guys out. All right. Any questions? No? Okay. You guys have a good week, and I will see you in a little bit. See you in about a week. All right? Hello.
Hey, Dave, this is Diana from Maxwell Cowboy Church.
Yes, ma'am.
Hey, I've already given you a call.
Early in the week, huh?